Today, we're going to get into something that I think is so incredibly important for anybody who's trying to make it in the markets, and that's market psychology.
Oh, absolutely.
We've got, you sent over some really interesting stuff that explores this whole world of psychology within trading.
Yes.
And I think what we're going to try to do today is really distill down what are the key things to think about when it comes to developing a professional trader's mindset.
Yeah, and it's so easy to get caught up, in like what's the best strategy or,
Yeah.
what are the best indicators.
Right.
But, one of the themes that really came out strongly from what you sent over was that even if you have like the best tools and the best kind of like, rigorously researched plan, if you don't have that psychology piece down, it's all for naught.
Right. So let's talk about that, this idea of the primacy of mindset. Why is mindset so important when it comes to trading success? Your sources really highlight the fact that trading is not just a numbers game. It's not just about crunching numbers. It's about decision making.
Right.
And of course, that's deeply influenced by emotions. It's influenced by the biases that we all have.
Right.
And it's influenced by our ability or inability to be disciplined.
Yeah. And what was really interesting, I think, from a lot of the stats that you sent was that traders who actually take this to heart, who really prioritize psychology,
Yeah,
they tend to do a lot better, especially in the long run,
for sure.
than those who don't. And it's interesting because, the markets themselves, with their inherent kind of like up and down, chaotic nature in a lot of ways,
Yeah.
that acts as kind of an accelerant on all these emotional.
Yeah, because every time the price moves, every time some news comes out, you feel all these different things. You
Yeah.
feel fear, you feel greed, you feel excitement.
Yeah, panic.
Yeah, panic.
Right.
And if you don't know how to kind of be aware of those feelings and then manage them, then you're going to make mistakes.
Yeah. Yeah. And I think that takes us nicely to kind of some of the big emotional pitfalls
Yes.
that traders can fall into. And the ones that kind of the sources, pointed to over and over again were kind of like these big three, right? Fear, greed, and overconfidence.
Right. Well, let's break those down. Let's start with fear.
Okay.
Fear is, so basic.
Okay.
And in trading, it can manifest in so many different ways.
Absolutely.
Obviously, there's the straight up fear of losing money.
Right.
But then you also have, things like FOMO,
Yes.
the fear of missing out,
Yeah.
and that can lead people to make really bad decisions.
Sure.
And then you also have kind of a fear of pulling the trigger.
Yes.
You've done all your analysis.
Yeah.
You think you have a good trade, but you
hesitate.
hesitate and you don't do it.
And what the material you sent over showed, I think really clearly, is how damaging this can be.
Yeah.
On the one hand, as you said, you might completely miss out
Right.
on a valid entry point because you're just too scared.
Yeah.
But on the other hand, it can also lead to people exiting, like winning trades
Yeah.
too early.
Right. Right. So fear can cut both ways.
Absolutely.
Then we have greed.
Yes.
This drive to always make more.
Sure.
And the sources, explain how this can make people kind of just throw all caution to the wind
Absolutely.
when it comes to risk management
Yeah.
and over leverage themselves.
Yes.
In this quest for outsized returns.
Yeah. I mean, greed is so interesting, right? Because what it can do, it can really make you kind of almost delusional.
Uh-huh.
It can make you just hold on to these winning trades for way too long.
Right.
Hoping that they'll keep going up and up and up.
Right.
Even when, maybe it's time to get out.
Right. So it can make you kind of ride the wave down.
Yeah, absolutely.
And then the last of the big three is this idea of overconfidence.
Yeah.
You have a few winners in a row.
Right.
Maybe you got lucky.
Right.
Maybe the market was just in your favor.
Yeah.
But all of a sudden, you think you're invincible.
Exactly. You think you've got it all figured out.
Yeah.
You've got some special insight or skill
Right.
that nobody else has.
And that's when you get really in trouble.
Yeah, because then you start, taking too much risk. You stop using your stop losses. You start just kind of like, making decisions without really thinking them through carefully.
Right. You think you can beat the market.
Yeah, exactly.
One of the things that that your sources talked about was this classic case.
Yes.
And I think this is so insightful where traders, and we all do this from time to time, is, we'll cut our winners short,
Uh-huh.
take a little profit because we're scared,
Right.
but then we'll let our losers run, hoping that they're going to turn around.
Exactly.
And it's really interesting, I think, to think about why we do that.
And the material you sent actually had a really interesting point on this.
Okay.
This idea of loss aversion.
Uh-huh.
You know, the fact that the pain of a loss
Yeah.
is so much more
Yeah.
than the pleasure of an equivalent gain.
It's so true.
Yeah.
So, okay, we've identified these kind of emotional obstacles.
Right.
So the question now becomes, how do we actually develop a more kind of resilient
Strong
mindset, a strong mindset? You know, your sources offered some key strategies, I think, for developing this mental toughness.
Yeah, and it all starts really with self-awareness.
Right.
Right? You can't control something if you don't know it exists.
Sure.
And the same is true for emotions, right?
Yeah. Yeah.
And one of the techniques they talked about that I thought was really interesting was this idea of keeping a trading journal.
Right. And it's not just about like writing down what you did. You know, it's not just about, you know, here's the price I bought at, here's the price I sold at. It's
about how you felt.
It's about the emotions.
Yeah.
Right. What were you feeling when you entered that trade?
Right. Were you fearful? Were you greedy? Were you overconfident?
Exactly.
Yeah. I think that's so important.
Yeah. And then as you track this over time, you can start to see patterns.
Yeah. I think that's really powerful.
Yeah. And another piece of the puzzle, you know, in terms of developing that strong mindset, is having a really well-defined trading plan.
Okay.
You know, the sources really emphasize having those clear entry and exit rules, position sizing, risk management, like all of that, you know, figured out beforehand, before you even think about pulling the trigger.
And the power of that is it kind of keeps you grounded.
It acts as an anchor.
Yeah, it keeps you from doing those impulsive things.
Exactly.
That you're going to regret later.
Right. Because when you have those rules in place, you know, in black and white, you're much less likely to kind of like deviate from your plan.
Right.
It's just because you're feeling scared or you're feeling greedy or whatever it might be.
Yeah. Yeah, I think that's really powerful. Then there's the whole idea of discipline.
Yes.
You know, and this is huge.
This is big.
And this is about like setting your risk parameters.
Yeah.
And then actually sticking to them.
Right. So for example, you might decide that you're never going to risk more than, let's say, 1% of your trading capital on any given trade.
Right.
Right. And then you have to, you know, have that discipline to actually stick to that no matter what.
Yeah. It's so easy to say, yeah, I'm only going to risk 1%, but then, you know, you get in the heat of the moment and all of a sudden
it all goes out the window. Yeah. And the sources really kind of hammer home this point of like trading like a business.
Absolutely. Not like gambling.
Yeah. Yeah. And I think that's such a key distinction.
It is, because when you think about it like a business, you know, you're much more focused on long-term profitability.
Right.
You're thinking about, you know, consistent processes, managing risk, all of those things.
Right. You're not just trying to, you know, hit a home run every time.
Exactly.
You know, you know, and lastly, the sources you sent over talked about this idea of mental conditioning.
Yes.
You know, and this can take so many different forms.
Totally.
But things like, you know, meditation, visualization, you know, even physical exercise, all of these things can actually help you kind of manage your emotions
for sure
when you're trading.
And it's kind of amazing, right, how these things that seem so kind of separate from trading has such a huge impact.
Yeah, it's all about kind of training your mind to be, you know, to be able to handle stress.
Exactly.
You know, to be able to think clearly.
Yeah, because, you know, when you're in the thick of it, you know, when the market's going crazy, you need to be able to stay calm and make rational decisions.
Right. Now, the sources, you know, to kind of bring this all home, they gave some really good real-world examples.
Absolutely.
And one of them was the story of Jesse Livermore, who was just a legendary trader.
Noisy trader.
But he had his ups and downs, and his downs were really down.
Oh, yeah.
And a big part of that was, you know, just emotional control.
Absolutely.
You know, he was a genius when it came to the market.
Yeah.
But he just couldn't manage himself.
Yeah, he couldn't control his emotions.
Yeah, he couldn't stick to his own rules.
Right. And, you know, he actually ended up, you know, broke.
Right.
More than once.
Yeah, so it's a cautionary tale.
It is. It shows that even if you're incredibly talented,
Yeah.
even if you've got this amazing gift for the market,
Yeah.
if you can't control your emotions,
Right.
it can all come crashing down.
Yeah. On the other hand, the sources talked about Paul Tudor Jones,
Yes.
who is, a very successful trader.
Extremely successful.
And he's known for, really emphasizing risk management
Yes.
and staying unemotional.
Yeah, detached.
Yeah. He kind of has this ability to, not get swept up in the moment.
He's very disciplined.
Yeah. So if there's one takeaway, for you listening about market psychology, it's not just about the strategy.
Right.
It's not just about the tools.
It's about you.
It's about you and your ability to master yourself.
Exactly.
Your thoughts, your emotions, and ultimately your actions.
Yeah. If you want to think like a pro and trade like a pro, you've got to control your emotions.
Yeah. Right.
You've got to have a plan.
Right.
And you've got to be disciplined.
And what's so interesting, I think, is that the sources kind of make it very clear that the inner game of trading,
absolutely,
the psychology, the emotions, it's just as important as the outer game,
if not more so.
Yeah, it's really amazing.
It is. And this kind of leaves us to like a final thought for you.
Sure.
To kind of ponder as we wrap up. Where else in your life where risk and emotions come into play,
right?
Maybe in your personal life,
right?
In your business,
right?
Could you apply these same principles of self-awareness?
That's a good question.
That we've been talking about today.
I think that's something for everybody to think about.
Absolutely.
So yeah, some great insights there.
Yeah, thanks for sending over that material.
And thanks for joining us on the deep dive.
My pleasure.
We'll see you next time.
See you then.